Good morning, everybody. Welcome to the Flow Show. Another quiet Monday to get us started. We're going to be knocked out by the time we get to the end of March, into the first quarter. Oh, it's going to be manic. Anyway, here we go again, battling with the trading moves and getting on with the week. And a ton of data to come as well. What fun. Morning, Kate.
Good morning, Ryan. Good morning, everybody. Ready to rock and roll again. New month, new start, let's say, as well.
Yep, new month and new price levels to get in it. Yeah, the fade gaps. Yeah, all yours, mate. I'm not one for gap trading. Prices go where prices want to go, whether there's gaps or not. Anyway, let's get cracking. Lots to get over, of course. We'll get through the data. Oh, what's happened there? Oh, why am I in that? Ooh, what's happened to my calendar there? Let's go there. There we go. Back on the wagon. Right. Let's go through the data. We've had a bit of data out this morning. China, we had the Caixin manufacturing PMI coming in at 50.1, so lower than expected, just hovering above that expansion level. Australia as well coming out. Where is it? Can't find it. Their final number came in at 50.2 versus the flash number, which I think was 49.8. So that came in a bit better. Don't know why that's, where is that not showing on there? No, I'll give up. Oh, there it is, right up there on Sunday. Over at the BOJ, we had this summary of opinions from their last meeting. Not too much that we didn't already know. The main draw from that is that they were discussing the likelihood of more rate cuts at that January meeting. So keeping the ball going on that one. We've obviously had a ton of ECB speakers out as well since the meeting last week. Ren says more clarity likely on US trade by the March meeting. That's already been shot down in flames, it seems. McLuth, usefulness of a neutral rate is limited. The direction of travel on interest rates is clear. No commitment for any particular rate path. ECB's Vilroy was out doing the victory laps on Friday. He said policy will clearly go towards neutral and that the ECB is feeling confident on core inflation's decline. Then this morning, he was out saying that Trump's tariffs will increase economic uncertainty and it is a very worrying development and there will likely be further rate cuts. One of the Hawks, Casimir, says Thursday's rate cut moved us closer to destination, but we're not quite there yet. ECB Simkus is backing another cut in March of 25 pips and then sees a couple more rate cuts after that. So very dovish chatter coming in the first morning of the week. Over the data in the Eurozone, we had some first and some finals coming out from the PMIs. Spain saw a bit of a pullback, 50.9 was expected to go up 2 pips. So quite a bit of a negative number there from Spain. Have been doing so well through all this time. Germany final, that improved to 45 from the 44.1 flash number we got. Eurozone also picking up to 46.6, although France and Italy both went backwards. The UK, that improved by a pip, so all good there, but still in contraction. Still problems for the BOE with lower activity and higher prices and higher unemployment. We've got the BOE upcoming, of course. Flash numbers from Eurozone inflation saw headline number rising to 2.5% from 2.4%. The core coming in unchanged, was expected to pull back a pip. So sticky inflation there for January, which is going against what the ECB expect as well. So that's all looking not too good, going against the dovishness of some of these ECB members. We had Fed's Goolsby coming out on Friday. Mr. Don't take much from one report speaker there. It says he was liking today's inflation data, and it was a little bit better than expected. He's referring to that PCE data that Powell already gave the front run on. It came out as expected. Headline PCE year-on-year 2.6, core coming in at 2.8% as expected, but apparently that's better than expected as far as Goolsbeast is concerned. It says has no problem slowing the pace of rate cuts as we're feeling our way towards neutral. Right, let's get into the soup and nuts of it. So, bit of a volatile end to Friday's trading. About 5:10 in our time, Mr. Trump, a Reuters piece said that Trump was expected to issue the tariffs against Canada and Mexico beginning on March the 1st. That got the first reaction. That knocked dollar CAD all the way down to the 143s. Let's put it on a better chart, just in case you were living under a rock or was in the pub Friday. So we got a big knockdown in dollar CAD to the 143s on that headline that he wasn't going to do anything this Saturday, he was going to do it in March. It took just over an hour for that to be blown out the water as White House press secretary called those reports rubbish and that the tariffs would start on Saturday. Said that Canada and Mexico tariffs would start at 25% and also China would get hit for 10% as well. On oil, that would get hit at 10%. Then they said that Trump has not made up his mind on the tariff timeline for the EU. So that got us rocketing all the way up. And then we got all the rest of the stuff over the weekend. Mr. Trump himself later that evening saying that nothing can be done by China, Canada and Mexico right now to forestall tariffs. He says oil and gas tariffs will be put on by the 18th of February. Steel and aluminium tariffs will be coming this month or next. Absolutely will impose tariffs on the EU. We'll be doing something very substantial on those tariffs with the EU. Says he's not concerned with market reaction around tariffs, but says tariffs can be removed if enough steps are taken to reduce the health crisis. He also tapped on South Africa, saying he's cutting all their funding until an investigation into basically human rights issues are done over there. That brought a reaction from the South African Mines Minister, saying that South Africa can withhold minerals if the US withholds funds. And then a bit of a strange comment from Trump said the Fed was right to hold rates last week. That was after his rant that they should be lowering rates. Now we might be heading for the first bone fight in Trump's cabinet because Treasury Secretary Bessent said that tariffs are inflationary and are not good for a US industrial renaissance, which puts him a bit at odds over Trump lumping those tariffs on. China vowed to sue the US over those tariffs going on, but then we had a piece from the Wall Street Journal saying that they were going to look to open trade talks with Trump as soon as possible. Repeated their call that they wouldn't devalue the yuan to offset some of that. So it's all potentially looking a bit conciliatory as far as China is concerned. But it's all about reopening the prior trade deals that they agreed but didn't implement. So we'll see what happens with that. Mexican President Sheinbaum on Friday, ahead of all those headlines, said that they will wait with a cool head to see what tariffs come from Trump. And then once he slapped the tariffs on, she came out fighting, saying that the US has done nothing to stop the illegal sale of drugs in its own countries. Mexican sovereignty is not up for negotiation, and they will be looking to enact a Plan B, which is their retaliation measures, potential tariffs going on, and they will provide more details of that on Monday. Canada reacted, saying that the US tariffs violated the free trade agreement, and they said they will be imposing their own 25% tariffs on the US. Now, importantly for today, Trump announced he will be speaking with Trudeau this morning. So there's still big headline risk for dollar CAD in general later on. I'm trying to find out what time that meeting might or call might be taking place, because again, that's going to be a big risk, headline risk for the loonie. Obviously, everyone and his dog are coming out with analysis over these tariffs and what it means, including the banks. Morgan Stanley says a recession in Mexico becomes the base case after the tariff hikes. JP Morgan says that their models estimate that a 25% US tariff hike will be large enough to throw Mexico and Canadian economies into recession. So everyone's scrabbling around to work out what this is all going to bring. Everyone's pointing to inflation and recessions and all that sort of thing. Okay, as we knew they were going to be. Whether that's the final outcome remains to be seen. You have to remember that what Trump wants is deals and people to toe the line a bit. If he gets that, then we reduce a lot of what we've seen. If we don't, and we end up continuing and everyone wants to play hardball with him and call his bluff, then we're heading for problems. And so this is an ongoing situation. There's no way you can look at something like dollar CAD and go, right, that's that over. We've priced everything. We can now just start trading 15-minute charts again. Okay, we are not out the volatile situation we're in. Okay, where do you start with all that lot?
Yeah, good question. Well, the first observation or question that we may ask is Bassett going to last longer than Truss? But no, all in all, yeah, he did push through. But again, as already been said, there is still room for negotiation. So there is still enough uncertainty in markets for not completely trading the full whack tariffs. And that seems to be the plan all along, right? And we spoke about it as well. Yeah, it's going to be tariff whatever, but how wide are the doors open for negotiations? And I'm kind of somewhere, and I then would say perhaps especially with Canada to start with. Potentially, because if you look at the percentages of bad things that happen coming out of Canada to the US, I mean, if you look at it percentage-wise, it's not very big, right? But yeah, there is that big trade gap with Canada. You know what? And the market is right the way it reacts now. So we had this big jump, the gap trade because he puts on tariffs and everything gapped. But what's next is my observation now, and I hope that no one really went like buying the extremes in dollar CAD or dollar mix, for instance, because the whole saga, as you say, is far from over. But we can see on the reactions that well, I mean, there was already a fair part in the market because okay, you had a gap in dollar CAD, you had like 2%, 2.5% gap in the dollar mix, but we are slowly but surely coming back to more reasonable levels in between. So that means that the market is still hoping is maybe the wrong word, but it's still only half convinced that those tariffs are going to be long lasting. And I think that's the message that we see from markets today. There's a few surprising moves, but we can attribute it as well to the tariffs have been front ran, and now we need to keep a cool head. For instance, I thought even though we already came a very long way, as everybody knows, in gold, but I still thought it was going to open higher. Thought the gold silver ratio was probably going to be a bit higher, and where I thought that would happen, okay, on the crosses, it's of course stronger, but yen is a bit surprising because he stayed completely mum about Japan, and finding dollar yen up in the high 155s this morning was a bit surprising to me. But yeah, I mean, I think yen is one of those currencies, and I guess we can add Swiss as well, unless he he backs off on from tariffs on Europe, I guess the Swiss is going to be one of those currencies that's going to probably be a bit slower as well to come down. So that's about it. I mean, I'm more looking at what the market reaction tells me than what we actually need to expect more on tariffs. And there I come back to what you said. It's still a very fluid situation, and it is hard to take major decisions when we saw this move, like which is now a near 2% move in euro dollar. We need to wait now to see what's going to happen. I do think though that the euro will remain weak on certain crosses because it's more in Trump is aiming more at Europe than aiming, for instance, at and I'm going to take just a few examples: the UK right now, or Japan, or stuff like Switzerland, for instance. So I think we need to trade the relative safe against the relative in danger right now.
Yeah, and we have to be a bit careful with some of these moves because
Very
take euro dollar as one example. Okay, the low on a lot of the platforms was down there. Okay, not where retail platforms open. Okay, 101.41 is the low on Bloomberg.
is
Okay,
it?
for the euro dollar.
Is it?
Yeah, yeah.
Oh my dear.
122.49, I think, for cable.
Yeah, that I
So
saw.
that was thereabouts. But yeah, there's a few pairs. Let me check Aussie dollar. What do we get on that? 61. Yeah, that's about right. But yeah, I mean, you got to take it half with a pinch of salt because those are very, very early prices. Okay, when not all the market is open, so you can get anomalies like that. But you know, that's a bigger print lower than where retail have opened. So you can get a little bit disparity between retail and the wider market, which is obviously going to affect things like technical indicators. You know, that's if you're looking at a chart on Bloomberg based on that low there, it's going to have a different moving average connotations to what you're seeing on your retail platforms. But you know, we can only trade what we've got in front of us anyway. But back to the point, yeah, I mean, I think you know, dollar CAD's obviously off its highs. I think you're probably going to see, because we've got this call with Trump and Trudeau later, you're probably going to see a bit of a risk reduction. You know, anyone who's been long down here is probably thinking, well, if that phone call goes well and tariffs get stopped, we're going to be all the way back down here again. So I think perhaps we're seeing a bit of that easing coming off, bit of that risk reduction coming off for those who might have ridden that train higher. Dollar China, that opened up right up into the mid 736s. But then those conciliatory headlines from China, it's come all the way back down again. So there's lots of moving parts. So we just have to be very careful with that. You know, dollar CAD. Now the market knows there's a conversation going on. That increases the risk. As I say, good news, we're back down here. If nothing comes of that conversation, they don't get a deal done, we might be up through 148. Okay, so you don't get sucked into a false sense of security just because we're coming off a little bit. There is still massive headline risk that hasn't changed. Now, however, if there's no deal from this phone call and we can't get up through that high, or we can't hold a move above that high, you know, even if we nick it out by 10, 15 pips and then come quickly down below, that might be an indication that we've traded through all these headlines. It doesn't reduce the risk. Okay, the market is going to be pushing, going to definitely probably be buying the dips pretty healthily in that sense. But anyway, we'll talk a bit more about prices in a moment because we have got a busy old week on the calendar. Not that this data might make any difference at the moment, given everything else that's going on geopolitics, but we do have the ISM manufacturing out the US later on. So it always pays to keep an eye on the fundamentals, though. You don't ignore them, because once the headline risk abates, we go back to trading the fundamentals again. Tomorrow, factory orders and jolts gives us the first jobs numbers of this week. On Wednesday, we got ADP, a few bits and bobs, final services stuff, PMIs out from Europe and around the world, and then obviously that ends with the ISM services number, as well as ADP as well. Thursday, Bank of England Day. That's going to be one to keep an eye on, most definitely. Are we going to get a cut, or is it going to be a close run thing? Challenger jobs, we'll see if there's any big moves in layoffs and whatnot. And then on Friday, Jobs Day, NFP and Canada jobs, so double bubble from that. So a busy old week on the data front, irrespective of all the headlines kicking through with that one. So anything there that's standing out for you, mate?
Bank of England.
BOE maybe?
Bank of England. Well, the other thing that I said this morning in the room is all the data that we are getting now will likely be taken as backward looking because Trump opened a whole new Pandora box, right? So the way I'm looking at data coming out, the most recent data, albeit them being important, I'm going to look at them as potentially when people have a plan or when I have a plan, is to know whether an algo move on the data, those who respond the fastest to the data, all those models, take it to levels where I would be interested to counter any of them. And I'm not saying which one right here and now, but I'm just saying like if I or we or somebody has a plan, take the data as perhaps an opportunity to take it where you are interested in entering a position based on geopolitics and tariffs and however the discussions are ongoing, because the data could give us a bit of a bit of opportunity. That's how I look at them right now. And for second, I think Bank of England, because it's been limit border already a few times over there, and now they know they have one more piece of information on that we had over the weekend. So I think it's maybe a pretty important meeting, Ryan, for the Bank of England. And of course, it depends how they bring it over. But I guess we're in for perhaps a 25 BP cut, and then seeing how they bring it over. And that is going to be somewhere for me even more important perhaps than the jobs report in the US, the mover of the week.
Yeah, I think a lot of the market is coming down on the side that all this tariff stuff, whether it's one-sided or it ends up being tariff wars or whatever, is going to mean that central banks are going to start cutting. You know, take Bank of Montreal. They now think that the BOC is going to cut 6 consecutive times from now to take rates down to 1.5% over all this. So, you know, the UK might be a bit like Japan in avoiding tariffs. You know, it's quite funny when I sat down looking at the open. I'm talking the interbank open, dollar yen. You know, everything else had gapped. Dollar yen was up 13 pips, while CAD was up, you know, 180 or whatever it was at the time. So there's countries that are out of the spotlight. Doesn't mean they're not going to get hit, but for now they're out of the spotlight, and so those currencies are going to see a bit of support. You know, euro sterling's been down, the pound's stronger in that, but that's more to do eurozone weakness than the quid being ultimately strong. But you've got to look at these things. I think you're absolutely right, Kay. You know, let's look at dollar CAD. If the Canadian jobs report is good and the NFP is bad, dollar CAD would dump on that. Now, if we're trading up here because there's no deal with the phone call with Trudeau and whatever, you know, you've got to think, well, the data's just giving everyone a dip to buy. And that's the way you've got to look at the data now. Ali, you say, you know, ignore the data. You can't ignore the data. Otherwise, you're closing off half of what the markets are trading. You've just got to know when the data is important and when it's not, in the context of what we're trading at the moment. But you keep it in the back of your mind, because as I say, once things calm down, we go back to trading what the Fed's going to do. That's going to be continuing either way. So you need to keep an eye on the data, because it also might influence what Mr. Trump does. Mike already answered that in terms of what happens if this phone call. Yeah, if there's a deal, then we see a bit of calming in the market. If there's not, then we probably keep going the way we're going.
And I think Ryan and they, or at least Trump and the people around him, will know the impact that a deal, for instance, with Canada may have for all the rest of the market as well, because then he's going to have to do some explanation. And I that makes me think that if there is some kind of deal struck, it will not be screwing back the whole thing of the tariffs. It will be like perhaps a small percentage of stuff that gets relief from the tariffs, but he can't slap 25 on everything one day, and then the next day, so to speak, scaling back on everything. Because, well, I mean, it would create for massive volatility in the market because everything would correct massively. But I think that it may not be, yeah, a full deal if they manage to strike some kind of a deal in between. That's what I think. Yeah.
Yeah, but I mean, he's still got this, and we've still got a bit of a deadline tomorrow
Mm.
for some of this. I was half reading that the tariffs are on, but they're not on, or there's still a bit of leeway until tomorrow.
Yeah, and let's also not forget that people have been crunching numbers, but we always talk about oh, these are levels to do this and that. But let's not forget flows. Those big money managers, they will be busy, perhaps even right still now to crunch the numbers, and their models will come out with some with how they need to position their book for whatever happening. And we could see moves unfold only from tomorrow, for instance. We need to bear all of that in mind, because we as retailers, we tend to forget that there's other people in the market. Yeah, we always talk about central banks and Trump, but let's not forget the BlackRocks and whoever of this world. They have a gigantic amount of money that they can move around. So I think we are not done with moves. Even if you say like, oh, I'm counter trading this or I'm counter trading that, just bear in mind that those people still have to enter markets. Okay.
Yeah, and it's there's a psychology amongst traders. You see something like that, a gap up, and you think the first thought that goes through your head is, "Oh, I need to fade that because it's gone up so much." Yeah, you might make pips out of it, and I hope you do make pips out of it. But you got to, as long as you keep your thoughts on the risk and the volatility that's in that trade, and you position accordingly and manage your trades accordingly, then you might sail through. But I don't know when this call is. It could be in an hour. So if you're shorting on the top here and there's no deal, then boom, you're going to be potentially offside very quickly. But you can make the money as quickly as well. So it's two-way risk. Don't get biased into a trade too much and think, yeah, I'm all right, I'm doing all right, nothing can go wrong with it. Okay, you need to protect everything that goes wrong. Plan for the downside, not for the upside, because the upside will take care of itself if you've planned for the downside. Anyway, let's have a little scrabble around euro sterling. That's getting some entry levels. If we do get a BOE cut, then maybe we're going to see this just maybe rallying a little bit. But yeah, I've been saying that there's every chance we could come back here. I think we're probably going to be ranging for a bit in this one. But if there's a pause for the Bank of England, if maybe they want to see what's going to happen, or we get a close vote, it's a 5-4 to stay unchanged, then this one might have a bit further down to go. And then we'll see if we get another test down here into the mid 82s. It's going to take some, I think, to get back down to the low 82s. But you can never rule it out. But
Nah.
it's a surprise to see a gap in euro sterling. It's not something you often see.
It's the comment about Europe, Ryan, and it was already happening. Remember last week when I showed this copy of what's happened in July and August. It was already happening, and I also think the market already took into account, at least partially, that UK may be a closer ally than EU, for instance. But yeah, I think depending on what he decides on Europe, we could actually have a look. I think somewhere in that 60-75 in the 82s, I'll be happy. I'm actually short Ali as well from last week. It's yeah, I think we can have a look at in the high 82s. But then if it happens before the Bank of England, then we should be a bit careful. At least I have orders in there down there to reduce the position as well, because we never know on the Bank of England. We just never know. And if the Bank of England is a bit dovish, perhaps it gives us an entry to get back in a bit higher up, depending on again what Trump wants to do with the EU tariffs. The thing is, if you look at European data, um, and well, especially the country's data, and I'm not talking about this morning's PMI or CPIs, well, the PMIs in some way, um, they are weak. They are still very weak. So I think there's a bit of logic as well that euro sterling is trading a bit lower, in combination with will they escape any tariffs or so on.
Yeah, absolutely, and that's a good thing with this pair euro sterling. You can get a clear idea of what's moving it.
Yeah.
All this was the UK.
Mm.
Then we had the UK. The worries washing out a bit, and now this is all pretty much the EU stuff and the threat of tariffs and whatnot. You take a look at euro dollar. I think it's key, irrespective of what happened interbank rates, that we've held this 102 area, these low 102s. That shows that this little extension down here, maybe a bit of a flash out, do the stops, and then come back in, and we're holding that level. So this is still a key level, this 102 level, as obviously is that low down there, 101.70s. So keep an eye on this one. We've obviously gone through this zone here, but already it's starting to mess around. We saw price action in here. We're seeing it again. Again, I don't trust gap closes. If the price is going to shoot up there, it's going to shoot up there, whether there's a gap or not. It doesn't really matter. But here we have a lot of indecision going on now. What do we do next? Are we going to head down further, or are we going to get a bit of relief and bounce off? And I think there again, Kay, there's an aspect of full security, because if Trudeau gets a deal done with Trump and we see a bit of a reversal, everyone will start to think, oh, Mexico's going to be all right, and oh, maybe Europe's not going to get slammed as hard. He could get a deal done with Trudeau, and then 5 minutes later say, right, Canada's done. Now I'm hitting Europe with 50%.
Yeah.
So any relief rally you get on the back of Canada news, you need to be careful with,
Yeah.
because
I
they're
think.
not out the woods.
Yeah. I reckon Ryan you've got how many? 3 blocks. So in that we need to monitor for how Trump wants to handle it. And then within the three, if you look at Canada, Mexico as one block, perhaps there's still differences between both. There are de facto differences between both. One of these is a few hundred miles of wall. But basically 3 blocks. I think you look at yeah, as I said, the USMCA, the Canadian and Mexicans. Then you look at the EU as a standalone, I reckon. And then you look at China and whatever happens around China. So you may
Aussie as well
be
goes into that pot.
sorry.
Probably Aussie probably goes into that pot. Sort of
Well,
China,
yeah,
yeah.
but has Australia been threatened with tariffs now? Not in so many words, right? So yeah, I think Aussie Kiwi will probably follow China from a distance, but I'm more thinking about what the South African thing because they have they have been they are part of the BRICS as well. They have been clearly saying that they were siding more with China and Russia over the past years. So I think this they are part of that other bloc, the third bloc, and then of course Russia and perhaps a few other Asian, Southeast Asian also countries. So those are the three blocks I'm looking at really, which if you have a decision on the one, it does not necessarily mean that you have an immediate decision resolution or aggravation of the other one. So because I'm a bit somewhere I'm kind of skeptical on Europe because he says he's going to do something and um, but Europe did say that they were planning to buy more LNG and whatever else from the US. So I'm not sure whether Europe is really going to get hit very hard. But of course, to prove a point, he's probably going to come out with with some tariffs on Europe today or tomorrow.
Yeah.
So yeah, so that's how I'm looking at things regarding those tariffs. Yeah, and then as I said, we've got a few beneficiaries who are likely going to get off lighter or completely, which is likely being UK. UK has always been a good ally to the US. I mean, whether it costs them or not, I don't think the UK is going to put anything against the US.
Yeah, I think the ultimate thing is you've got to ring fence each currency. You can't say whatever happens with Canadian dollar is going to happen in euro dollar. There may obviously be a mechanical move if the US dollar's moving one way, but yeah, just ring fence all these, take all these, as Kay says, these blocks as separately, treat them separately rather than as the same dollar trade as everything else. Because we've got to remember these tariffs that he's put on to Canada and Mexico are nothing to do with trade. They're to do with drugs and immigration. We haven't even got to the trade part yet. That's the trade part to come, and that's the bigger effect than what we're seeing now. So we haven't even got to that part yet. Even the China tariffs are just on the fentanyl stuff, not on trade yet. Same with the EU, and he's got his bods working out the deficits and all that sort of stuff. So just remember what he's tariffing or why he's tariffing right now. It's not the big stuff, but look at what it's done to markets so far. Kate, right, you got any bits you want to have a look on? Have a look at?
Yeah, I can. Just going to yeah. I'm still trying to find a platform that shows me that 101.40 is also in the euro dollar. I'm a little surprised because I haven't seen it at all on any of my on any of what I was checking here on TradingView at least. I haven't seen it below 102 really. But anyway, not that important. So let's first of all talk about the one where I'm a tad surprised that it's not gapped higher. And okay, I'm straight away going to contradict myself. There has been a lot of buying going on, front running. Okay, the whole potential tariff situation. So yes, gold was already rallying. There's a bit of probably buy the rumor, take profit on the fact in this, but no matter how we turn it. Gold will still be a hedge against all kind of bad things. And unless we get like really deals that solve problems, not that displace them or kick them down the road, kick the can down the road, but problems that solutions that really solve the issues, all the issues, I still think is going to remain a bit on dips. But we are already trading back above 2800 now. Again, I'm still watching the 2820s and then the 28 and a halves. You know, my overall view, and now with Trump confirming that he is slamming tariffs, I'm trading what I see and trading what I hear. I still think that this gold is going to be remain supported. Let's 20. I think 2760 here. We went below 2780s this morning, the prior high, but the first real support I can see here is going to be now around 2760, and the 27 and a quarter. You know, just below where it held the last time in 2730s, 2535. If ever we start to go below there, and that is always something that I keep in mind where I'm in positions or IDs for the more medium term, is where am I supposed to be wrong? We can never say, of course, with certainty that the levels are going to break and then false break and then go up again. But where am I potentially wrong? So there's two levels I think where I could be wrong with my view, is if we get down below 27, 25, 35. But the big one here is now, and that's been displaced from 2590s, I think, is now going to be somewhere around 2700. So this zone here, if we start to get below 2700, 2535, 2700, 2695, then I think the party is over and we could actually go quite a bit lower. But therefore, we need to find some solutions. We also not need yields to start coming off very rapidly, because that is one of the risks now. Okay, regardless what inflation does, if tariffs, trade wars weigh on growth, I don't think that yields are going to hold up. Okay, we've already seen what is happening, and I'm just going to get on to German yields, for instance. They are continuing to come off, okay? Even with that inflation in the Eurozone, whatever, it doesn't really matter, okay? If there is a risk on growth, if there is a risk on global um, economic situations, those yields, I don't think are going to hold up. Now, what we could see is perhaps a bit of a steepening yet of the curve. But if you see yields rally on the back of potential inflation worries, I personally think is going to be a temporary fact, okay? But it could last days or weeks before this turns around. I'm just talking about the overall situation and then bringing it back to stuff that I'm trading, okay? Silver is the opposite. I thought silver would suffer a little bit on imposed tariffs, because of the potential weight it may have on economic situations. But it's holding up well. It is really holding up well, and I say two levels here: 31, and then here the 30, 60, 70. That is something that you need to look for supports. If we come back down here below, perhaps the text will sell a little bit, but I do think that 30, 60, 30, 70 is more the level that you need to watch here. And then on top side, 31, 65, 80. If that would go, yeah, then it's probably gonna go higher. Now, uh, it could be on yields, but I personally can't trade silver as a hedge against bad things, because being an industrial metal, to me, for silver to outperform gold, I always think that the economic situation should actually be a little bit better. But okay, I mean, this is what the market is trading right now. So trade the levels. My very, very long-term position hasn't changed, but it's small right now. I'm still long. I still think that over time we are going to go higher. But for the time being, I thought that there would have been a potential to come a bit lower. Um, Dollar yen. Okay, Dolly, first of all, observation and opinion. I think the yen crosses are driving more than the real dollar yen. But what we need to if you trade dollar yen, there's only a couple of levels to watch here. Okay, there's 153 three quarters and 156, and both ends are holding right now. So that is your range. That's really the range that you're watch now. Now, if you go onto the more longer term, I'm not going to put it up because it's a bit overloaded, that chart. But just know that the daily cloud, the top of the, is it the top of the bottom? I have to go. I think it's the top, right? And it's actually a very thin cloud. The top of the cloud comes in at 154 and a half today. So that's your intermediate level, right? But I think if we start to break below 153 three quarters, confirm below 153 35 45, this thing could really dump. But until then, if you trade dollar yen, there's really only one thing to do is respect that range for now. I do think the yen has potential to strengthen a bit. Okay, scalping faster things on the long side of yen for the time being. So if it really will need to get back above 156 to get going. So for as long as we are under there, I'm going to take it as the yen has a potential to strengthen a bit. But is it on the dollar yen? Is it on euro yen? Look at the euro yen, for instance. We're still in the triangle, but it's getting close. Okay, it's getting pretty close. 157 and a half, 158 is going to be a decent little zone to monitor here, I think. And I have the impression that unless Trump says, yeah, EU is not going to be tariffed, there is a chance that this trades and goes for the support here. Okay, Aussie. Aussie is lower, but as I said, if the Aussie comes down, but it's still a big figure away, yeah? But we are through here the prior low. We are actually turning around. It's trading 61.40s. This could end up being a bit of a fakie, and we can move up. But as we've been saying, it's still trading at very low levels. Um, I'd say watch the close today, anywhere 61.35 and 61.70, Ali. If we get back above 61.70, this may have been a bit of a fakie, okay? I still think there's a risk we get down to this level here, but will that not be an overshoot? I'm starting to think that some of those currencies may be relatively close to a potential bottom, but it's just the thought of the beginning of the week and the end of at the end of last week that I had. Okay, all in all, we need to see bounces to take us back through certain levels before we can say we are starting to turn around. Okay, so here this is your 62. Oh no, it's 62. Hang on, here this one. 61, 70, 75 would be a start if you get below there. No, Nuno, I'm just going to reply. Euro dollar is a different one. I still cannot buy euros, to be honest. Because just the data, the economic situation in Europe. Of course, we are going to have a 1 or 2% move if onto the top side if tariffs are not applied to Europe. But I on the basis of fundamentals, I can't buy. I really can't buy euros really. Um, just and then I give it back to Ryan. Dollar makes broke. Okay, dollar makes broke the wedge trading above now 21.90, 20.90, 21 the figure. This is now the level that we are watching to see whether we have the potential to move finally up to that 22 that we were speaking about from around here, saying that if really the situation deteriorates, it is possible that the dollar mix goes back up to 22. Now we are in this perhaps at the start of the attempt to really get up there, but I would also say that be careful because the situation is so fluid. If you get back below 2090, I think some high buyers may bail, and we could actually see a pretty sharp setback. The one that is interesting is, of course, Euro mix, because we're sitting in a situation where euro could also be tariffed. So okay, so we had a bit of a move through that trend line here, but it could end up being a fakie. And this one, I'm going to watch it very carefully. It could be that this top here is enough. So I'm going to carefully watch what Trump is going to say about both Mexico and Europe. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good stuff as always. What 40-minute show on a Monday. I like a quiet Monday to ease myself into the week. No chance of that. Take care, folks. Have a good trading week. Trade safely, please. If in doubt, you can stay out and come back when the dust has settled. And keep coming back to the Flow Show, because we've got you covered. All the moves and news to come. Have a great day. Have a great week, everyone. We'll see you tomorrow.